Hello everyone, my name is Paul Ho and I'm with the Asian equity teams at UOB Asset Management. The short answer to that is no. Markets continue to be volatile, inflation numbers continue to be high, and the Fed has signaled that they are likely to raise rates aggressively to deal with it. If the Fed is not careful, this might precipitate a recession in the coming quarters. At the same time, when we look at recent company earnings reports, we see earnings starting to be revised down, which should add pressure to equity markets in general. However, China, which has started declining almost 1 year before developed markets, might actually be in the bottoming out process. We need to watch this space carefully before we can conclude that the worst is over. Now, we can divide Asia into 3 buckets. I think markets like Korea and Taiwan, which are more leveraged to global growth rates and are more exposed to tech exports, might do a little worse. ASEAN markets have traditionally been more defensive in a global slowdown. Finally, there's China, which should do better than global markets simply because there's more room for fiscal and monetary policy response if a crisis develops. You've seen recently that China is talking about doing targeted fiscal and monetary easing when developed markets are raising rates. Now, unless we see another more serious round of COVID outbreaks in China that warrants an even more drastic lockdown, we believe that the Chinese equity market has probably priced that all in. In fact, you might have noticed that many sectors within the market have started seeing meaningful rebounds. The markets appear to be pricing in the beneficial impact of the government's fiscal and monetary stimulus. In anticipation of that, we've increased our China exposure, and so far, that has worked well for us. Earlier on, I made the point that this might not be the right time to bottom fish given the uncertainties. That is why it is important to stay invested, as we never know when markets will turn. It is also important to diversify your portfolio across different assets that will do well over time. Finally, investors should look at their investments over longer time horizons and be prepared to ride the short-term volatilities in the markets.